Welcome to Inside Guelph. My name is Zahnd. Today I have for you the mid-June market report update. And hey, if you like content like this, make sure you click on the subscribe button, hit that notification bell, and you'll be reminded of content next time we send something out like this. All right, so let's get right into it. The market actually made its first correction of the year, and I'm just going to pull up the screen right here. I think you can see it. And then I'm going to dive into some news. So I just want to get you the goods right away. As you can see, we had a slight dip here of about 5.59%. Again, this is only midway through the month, so there could be a couple of different factors that are playing into this, and we'll get into that a little bit later. But as of right now, the mid-month June report is showing that we have an average sale price of $738,000, which is a $43,000 drop from the peak of last month. So let's get into it. What's potentially changed here? And let me flip back to this camera here. What's changed? So it started January, we've had some government intervention with them increasing the qualification rates for mortgages up to 5.25%. So that's the first cooling measure that was put into place throughout this pandemic. And I explained in the last video the likely reason they're doing this is because the economy is reopening and we're no longer needing real estate to back the economy to keep the economy running. So now that things are opening up, some cooling measures have been put into place. And that could be an explanation as to why things have cooled down. There's some other news that's happening here. So there's some clickbaity articles that you can see. You know, this world's second largest housing market starts to look fatigued. So as you can see here, sales have come down across the country. They're still at its all-time high though. So I mean, yes, we did see some slowdown, but we're still selling more homes right now than we ever have before, and that'll reflect in the numbers that I'll be showing you, even for the Guelph Real Estate market as well. And another clickbaity article that was put out, could Canada's high-flying house prices come crashing down? So they painted a doom and gloom scenario here that prices could plunge as much as 30%. But if you scroll down to the article here that I've highlighted, that's the worst case scenario, and what has happened is the economic indicators that they were forecasting this drop on have already shown that they're not happening. And what's more likely to happen is the base case. So they have a bear case, a base case, and a bull case essentially. And the base case is looking like we're going to have a 4.4% growth over the national economy, housing market, in real estate as their base case. And they feel like that is the more appropriate scenario that's going to play out, and this is right from RBC Economics. So what does this mean for us? So again, it's nice to see that things might be cooling off a little bit to make sure that we're not running into multiple offers all the time, maybe getting that opportunity to do your due diligence when you're purchasing property, and just making the house buying experience a little bit more fun and enjoyable when you're not going into multiple offers all the time. And there's some interesting things. So let's get into the presentation. If you have any questions or comments, make sure you hit the comments below. Ask us questions. You can obviously reach out to us directly as well. Answer any questions that you may have about the Guelph real estate market, real estate in general, or anything else like that. Okay, here we go. Let's jump into the screen here. And you might not have seen all those articles I just shown you, but here they are again, just in case you didn't see it. Here's that one article from BNN Bloomberg. Just talking about the amount of housing sales that is coming down, but it's still an all-time high. And then here we have it from MoneyWise. They're essentially looking at RBC's report that they did for the housing market, and as you can see here down in the midsection, they actually start disclosing that this worst case scenario probably isn't going to be what's happening. So take a look at those articles if you want to see something. Okay, yeah, one more thing I want to mention before I flip over to the presentation is that another good indicator that things are going to start potentially loosening up for us and it's going to potentially help bring more inventory to the market is that lumber prices have seen almost a 41% drop since our all-time highs. And that's a really good thing for builders because builders have a hard time predicting what it's going to cost to build a house. Therefore, potentially some have inflated their prices and maybe have also held off of coming to the market with their homes because it's so unpredictable right now of what it's going to cost them to build a house because houses are primarily made of lumber. So with lumber prices coming down, hopefully that's going to give some confidence to builders that the lumber market is more stable and is coming back to a realistic price point so they could start building homes that don't have to bake in these crazy costs for lumber. So another interesting indicator that more supply could hopefully be coming to the marketplace, which is something we desperately need. Even if sales slow down, the amount of listings that have to come to market to even start catching up to our regular levels, it needs to be quite substantial. How much weight needs to be different in terms of how many listings come to market to how many sales are made. So hopefully this can help bring that inventory back to life, so to really bring a lot of stability back, a lot of balance back to the real estate market. All right, perfect. So let me get into the report here and kick it off. We'll present. So like I said before, the inventory is really down still. So what's happening at this time of the year? Usually we have 284 properties come to the market. Two videos ago, we had 170. Right now, last check-in, we had 151, and right now we have 143. So as you can see, inventory spiked up a little bit, and now it's trending down month over month again. This is what it usually looks like in January for a product mix: 179 singles, 16 semis, 51 towns, 54 condos. Right now we're sitting about 74 singles, 3 semis, 33 condos, and townhomes. As you can see, we don't have near the options that we usually do according to our 5-year average. So inventory is very suppressed. So let's see what's happening with how many listings are coming to the market per day and how many homes are being sold per day. Because obviously we need more listings coming to market and less homes being sold to build up that inventory back up. That's why the lumber prices is a good indicator that hopefully some builders can have confidence to come to the market and not have to build in these crazy expectations for very high lumber prices. So we started the month with 140 units on the market, as you can see here, and our average of properties coming to the market every single day is about 10.7 homes per day come to the market, which gives us around 322 units brought to the market every single June. Okay, so right now, the last time we checked in, it was at 11.8 homes coming to the market a day, and right now we're sitting at 11.5 homes are coming to the market per day. So this is a good indicator because it's showing us that we're getting 7% more homes than usual, which is exactly what we need. So hopefully we see the opposite on the sales side. So let me bring that sales data over. So typically at this time of the year in June's a bit of a slower month than May. May actually was sitting closer to an 8.5 homes per day average. So June historically is a bit slower. So on average, we have about 7.9 homes come to the market a day, which is 236. The last time we checked in, we were selling 9 homes a day. And right now, thankfully, we dropped to 8.5 homes a day. So that if that trend continues, we should see about 256 homes sell in the marketplace in June. So you would think that would be really great for building inventory. But there's a caveat to this, which is really interesting. And I'm going to explain a little bit more about this in just a moment. 54 homes have failed to sell this month already. And last time we checked in, last month, it was 1.6. So I'm actually going to get out of the presentation real quick, flip over to my handy spreadsheet here, and show you what I mean here. So I know I'm looking at a lot of numbers. Where's the failed sales? So here we go, failed sales. In January, we had 19 failed sales. February, 21. 57 in March, 46 in April, 78 in May, and already, so that's for an entire month, 78 homes failed to sell in May, in the entire month, and only halfway through the month, we're already at 54 homes failing to sell a day. As you can see, we're failing to sell 3.4 homes a day right now. So what does that mean? Well, when we look at our data here, what we could see is that we're getting a lot of listings coming to the market, but there's a lot of, what's happening is sellers are trying to sell their home. They're not getting the price they want. And a lot of the times they're pricing their home under market value. So for example, if their house was worth $1 million, they might list it at $800,000. And now let's say they got a bunch of multiple offers and they only got $900,000 on the multiple offer bids, which was $100,000 less than they really wanted, which was what they wanted was $1 million. So what a lot of these sellers would do is now either cancel, suspend, or suspend their listing. So they take it off the market, fail to sell, but that's a stat that's going to be registered here. That's a fail to sell stat. They canceled or suspended their listing. And then they put it back up at $1 million. So that brings a new listing, that triggers a new inventory piece re-triggered back to the marketplace. So as you can see, some stats could be double counted here, which doesn't really help understand the situation all that great. But what we can see is, it's an indicator that sellers aren't getting what they want anymore. They're going for some really astronomical prices. They're not getting them. They're canceling, relisting, asking for their higher price. And that's also going to affect the average list price to sale price ratio, right? Because if you're asking for a certain price, you don't get your price, and then you relist it, and then you get that price, it's going to show that you're achieving 100% list price to sale price ratio, when in reality you didn't get actually what you wanted. So that throws off that stat a little bit too, and we're going to get into that, right? Because we had a lower amount of our average sale price dropped, but what you're going to see, interestingly enough, is that our average list price to sale price ratio went up. And a way you can explain that is because all these homes are failing to sell. They're going back to the market at a different price, and then they're capturing that list, that price they want, and that might be driving that list price to sale price ratio up, even though the average sale price is down. Right? So in my opinion, it really does look like the housing market is starting to balance and cool off a little bit, and we just need to look a little bit deeper into the numbers, really understand what's happening. Okay, so let's talk about what's potentially happening in our future forecast. So if these numbers stay true for the next 30 days, what does it look like? Well, right now we have 143 homes on the market, and if we look at the last 15 days and establish a trend line of how many homes are coming to market in the last 15 days, we can see 11.7 homes are coming to the market every single day over the last 15 days on average. That means in the next 30 days, we're going to bring 352 properties to the market. The outflow is staying at 8.5 days, so we're going to be selling 256. This 75 failed to sell is lower than the 3.5 a day that was registered in the back. Just because I don't believe that we're going to have 110 homes fail to sell this month. I believe that 75 is a little bit more of a realistic number of what should fail to sell based on what's happened in the past. I could be wrong. There could be 110 properties fail to sell, but I'm plugging in 75 here as an educated estimate. So when you take the 143 homes that are currently on the market, you add 352 homes that are coming to the market, and subtract the 75 that should fail to sell, that means there's about 420 units for sale available for the marketplace to consume. And if that is available in the next 30 days, and we see that in the next 30 days we're going to consume around 256 homes, that would leave us with 164 units for sale. So that's the new projected inventory, which would be about, actually this date's wrong, this should be July 1st. And July 1st we should see about 164 homes on the marketplace. So let me just get back to that here and explain some more things here. So if there's 420 homes available for sale and there's 256 on average being consumed, if we divide those numbers into each other, we should get what's called months of inventory. So how many months will it take for all the inventory to be consumed out of the marketplace? Right now we're looking at 1.64 months. So in 1.64 months, all the homes in the marketplace will be consumed if no new listings come to the market. It's a way of establishing what kind of market are we in. Are we in a seller's market? If we're in a super crazy seller's market, this number is 0. If we're in a buyer's market, this number is around 9 months of inventory, 12 months of inventory. In a balanced market, we're kind of closer to the 3 months of inventory mark. Okay, perfect. Obviously, if you have any questions about this stuff, feel free to reach out to us. We're here to help, and we want to make sure you're fully informed of what's going on so you can make great decisions. That's what it's all about. All right, so here's this chart again, the average sale price. As you can see, we're at 738,000. The first time we've dipped, we actually dipped back to February levels right now. So we could see that we're down $43,000. However, year over year, we're still up 127,000. So we're still up 20% month over month. So June 2020 to June right now, we're still up 127,000. So still a great decision getting in the real estate market. It does look like there is a buying opportunities being created, because like we said in that previous article, RBC is also thinking that they're looking at the base case scenario about 4.4% appreciation per year. So if we're looking at a per year basis here and you're a buyer looking to get into the marketplace, you can still expect growth in the market as long as you're having a long-term hold mentality on your property. If you're a seller looking to get out of the market because you have to get out of the market, you can expect about potentially a 4.4% growth in the market over year from here on out. So these crazy 25, 30% gains might not be in the cards. So if you need to get out, you're still at the top of the market here. So it's still a good exit point for you if you need to get out. And just while we're on this topic, I can actually flip over here to the year-over-year chart because I do want to show you what's happening on a larger scale here. So I'm going to zoom in for you so you can understand what it looks like here. All right, so what does it look like year over year? So if we're looking at the year over year, we're almost halfway through the year here, and we've sold 1,473 units in the Guelph real estate market. So we're on the pace to actually have one of our one of the biggest sales years ever in the Guelph real estate market, looking like we're going to break that 2,500 unit mark for the first time ever here. And it looks like the average sale price is $749,000 for the year. So this is a lot more data, and when you get a bigger data set, you're going to get more accurate numbers of what's actually happening. Sometimes the month-over-month view doesn't have enough data to really portray what's actually happening. So it's always good to sometimes look at this year-over-year chart here. So we're sitting at $749,000 average sale price. So compared to the $616 last year, we are up 21.5% year over year. So still great gains. But what's likely going to happen from here on out if the market continues to cool and the economy opens up and less people are looking at real estate, we're likely going to have probably more of a flat to 6% growth. So that 4.4% growth is looking likely pretty accurate, because as we saw after 2017, which this year was a lot like 2017, and in my previous videos I've been describing how there's so many similarities to those marketplaces. We can see after a big bump year like that, there was a flat year and then a year of growth again. So if you look at those 2 years combined, you're looking around 3.3%, 3.15%. Okay, quarter over quarter, I always like looking over quarter over quarter as well, because that is again a bigger sample size of data. We can see that in the first quarter, year over year, average sale price year over year, we were 27% up over the previous quarter of 2020. And then here, the average sale price year over year, so Q2 2021 versus Q2 2020, we are up a whopping 28%, which was one of the biggest gains we've had, except for 2017 when we were up 32% in 2017 Q1. But when we look at quarter over quarter, we can see that the acceleration of appreciation is slowing down, because quarter over quarter, so Q1 2021 versus Q2 2021, so Q1 2021 versus Q2 2021, we're up 3.13%. So that is a much more reasonable growth rate for a marketplace, and you can see that it's starting to taper off. We've definitely peaked out in Q1, and Q2 is more of a leveling off, deceleration, and hopefully it's going to be able to bring more stability and options to buyers in the marketplace. Okay, perfect. Rocking and rolling, continuing on here. So these are the lead indicator stats here. As you can see, this is listing inflows, how many listings we're bringing to the market every single month, and we're getting back to our averages. We're getting back to normal here. That's not really ideal in terms of listing inflow, because we do need a spike of listing inflow to build up our inventory. However, it is what it is. We're leveling off in the listing inflow back to our 5-year average, close to it. And then our home consumption is still pretty elevated, but we actually touched the line that we had last year in June. Obviously, there was a recovery from our health crisis that we had. And here we go. We could see that we've touched 2021 levels, and we're slightly above the 5-year average. So things are again leveling off here. And you can see that the gap between how many homes coming into the market and out of the market is growing, which means we should be adding more inventory. As long as these listings don't keep failing to sell, we should hopefully be building up some inventory. Okay. Days on market has stayed flat for the last 3 months, so it's 10 days on average, still super well below where our 5-year average is and where we were last year at this time. We were at 20 days on average on the market last year, and here we're still sitting at 10. Definitely came up from our low of 8, but still hovering strong at 10. This is that interesting stat I was talking about earlier. Our list price to sale price ratio average jumped from 101% to 106% month over month. However, our average sale price dropped 5.59%, right? It's a bit confusing. It doesn't make a lot of sense, but when we look at how many homes have failed to sell this month over previous months, we can kind of see that, you know, it's likely a case of people taking their home off the market, putting it back on the market at a different price, and then achieving that price goal, which will skew the list price to sale price ratios, right? Because The homes that fail to sell aren't included in the list price to sale price ratio analysis. Only homes that are sold are, right? So if you put a house on the market and it would have technically got $100,000 less than what it was listed for, it was pulled off, put back on a new price, and then it achieves 100% of that value, you can see how that could potentially skew this number a bit. So in my opinion, last month was a better indicator of what was happening, and was, in my opinion, a lead indicator to set up for this drop that we had this month of 5.59% in average sale price. So this for me was a bigger lead indicator and of what was to come more than this one is. Okay, moving on. Homes available for sale. As you can see here, our 5-year average graph. This really puts in perspective where we usually are to where we are right now in terms of how many homes are usually available for sale. Even in 2020, we had double, almost not quite double. We had 50, 60 more homes for sale, which is quite considerable actually, last year versus this year. So again, that inventory is really beaten down, and we definitely want it to come and recover. Here is the interesting graph. If you've been watching these videos at all, you'll see that I compare these numbers all the time. Here's what happened in 2017 right over here. I know I took all my lines out of here, but here's what happened in 2017. We had that crazy run up in 2017, low inventory, low interest rates, just like what we had this year. Government steps in to cool the housing market, and then we had a drop back down. And then it took us some time to recover. It took us probably till about 2020 to recover the average sale price right around here. It took about 3 years if you bought at the top of the market to catch back up to home values. But again, if you bought in 2017, you're still holding, you're doing really well. But here, if you look at this trend line, it looks like we're doing something very similar, right? Big gain up, drop down. So it's gonna be interesting to see how this month ends, as well as what next month brings, because we might hopefully see a flattening here, a leveling off, because at the end of the day, we don't want anyone losing equity in their home. But we also wanted to take a little bit of a break from the massive gains we've had, so other buyers can enter into the marketplace and have some options while they're doing it. Great. That's pretty much the end of the presentation for me. Again, my name is Steve from the Zahnd team Real Estate Advisors. We're the only real estate company in Guelph that guarantees a 5-star real estate experience, or we pay you the commission back. So if you do have any questions about that program, about us, any questions for yourself, the easiest thing to do is just reach out, give us a call. If you're interested in buying or selling real estate, the best place to start is with a phone call, because there we do a strategy call. We start understanding your goals and really then can build you out a great game plan to achieve your goals. All right, appreciate your time. Thanks very much, and I'll see you next time.